Hi, this is Steve Dale, and today I'm going to address you as Captain Dale. And what we're going to do is we're going to talk a little bit about how the IRS examines yacht clubs. Okay, so a lot of this presentation is from materials given to the IRS agents when examining books of social clubs, which include yacht clubs. And if you're looking for these materials, which is going to be much of what this is based on, you can find it by Googling Chapter 76, Exempt Organizations Examination Guidelines. So, this Internal Revenue memo contains specific examination guidelines for examining social clubs. It provides examination techniques effective in identifying and developing issues commonly encountered during the examination of a social club. These guidelines are not all-inclusive, and they're not intended to restrict the examiner in identifying issues, but it gives us a pretty good idea of what they're looking for. A little background information. Yacht clubs are included in Internal Revenue Code 501c7, which exempts social and recreational clubs from federal income tax. Generally, social clubs are membership organizations supported by dues, fees, charges, or other funds paid by their members. This usually includes things like college fraternities and sororities, country clubs, hunting, fishing, tennis, swimming, and other sports clubs, hobby clubs, ethnic clubs, and yacht clubs. So the examiner is supposed to look at the following: whether or not the organization requirements of a social club have been met, that the members are bound by a common objective directed towards pleasure, recreation, or a similar nonprofit, non-commercial purpose, and that all unrelated trade or business income has been properly reported, and that there is no inurement of income. Now, inurement is the prohibition of the use of income or assets of a tax-exempt organization directly or indirectly unduly benefit an individual, class of individuals, or other person that has a close relationship with the organization or is able to exercise significant control over the organization. So the examiners to review the governing instruments such as articles of incorporation, bylaws, or any policy statements to determine the following: that the club is organized for pleasure, recreation, or other similar purposes, that there are no activities expressly authorized that are beyond the scope of the social club, and there's no written provision limiting membership on the basis of race, color, or religion. Now, while they're looking at membership requirements, a social club must provide an opportunity for personal contact between its members, and the members must be bound together by a common objective. So the agent's going to review the following: membership applications, club handbooks, and any brochures or other information provided to prospective members to determine requirements and procedures for obtaining membership, and evidence of non-traditional business activities, and determine the percentage of gross income from these activities. They're also to examine and look for commercial activities. So part of this is that they're going to tour the facilities, noting any signs placed on the club property inviting the general public to patronize the facilities or functions, a presence or absence of signs restricting admittance to members only. They're to review admittance procedures to determine if facilities are open to the general public. A club should have some system in place, such as card keys or a membership log that restricts use of its facilities to members and their guests. The agent's going to review brochures, applications, policy statements, and governing instruments to determine if membership requirements are broad or vaguely stated. A club should have established membership criteria which precludes the general members from becoming a member in the organization. The criteria must include such things as requiring new members to be selected and approved by the board's membership or the leadership. They should review, the examiner is going to review the minutes for discussions of proposed activities or restricted membership that may violate exempt purposes, and analyze the initiation charge or dues to ensure that the amount charged is not so low that a one-time or transient use of the facilities by the general public is encouraged. So you can't have a one-day $2 membership fees. That's exactly what the IRS is looking for. Their agents also to analyze and review disbursements for advertising to ascertain if public patronage has been solicited, including newspapers, yellow page advertisements, vacation guides, and other publications printed by the Chamber of Commerce or Visitors Bureau. A lot of this was written some time ago, even though it's still solid law today, so that obviously would include things like web pages and that sort of thing as well. Now, a lot of what we're going to talk about are funds that the yacht club might get outside of general membership dues and member funds. So 35% of the income of a club can come from investment income and other sources outside membership without losing their exempt status. But what we're really going to focus on is within the 35%, not more than 15% of gross income should be derived from use of the club facilities or services by the general public or non-members. So this is called the gross receipts test. And so a host-guest relationship will be presumed provided the payment is received directly from the member or the member's employer. So if a group of 8 or fewer individuals are in a party and at least one of the group is a member, and as we're going to see that the member pays the bill, that is presumed to be member income. Or an unlimited number of individuals where at least 75% of the group are members. Clubs relying on either of the host-guest assumptions described above are required to maintain adequate records to substantiate the appropriate facts. For all other occasions involving use by non-members, the club must maintain books and records for each use and the amount of income earned. This requirement applies even if the member initially pays for the use. For organizations exceeding the 35%, 15% limitations, a facts and circumstances test must be applied. So the examiners to determine the potential for non-member income and set the examination scope in this area accordingly. So they give an example, which is if a key card is used to restrict entry to members only and all other facts indicate the club is used solely by members, the examiner considered limiting the work in that area. Work papers still have to be adequately supported the conclusion that the club has no non-member income. The examiner is to interview the club manager about cash sales, noting that cash sales are assumed to be non-members unless there's some method to trace it back to members. Credit card sales, reciprocal use of the club, parties over 8 or more, club functions, and for that they're to review records maintained by a club to substantiate parties in which a host-guest relationship is assumed, and the availability of a reservation book, banquet book, or party function sheet as part of that record, and records of member sponsorship of parties. So in these guidelines, there's a number of examples that really kind of illustrate how this works. In this first example here, Mr. Y is a member of X Country Club. Mr. Y hosts a small party of the club for himself and 7 members. After lunch, Mr. Y signs his name and the member's number on a food drink voucher. The club must maintain records showing that 8 persons were in the party and Mr. Y was a member in attendance and Mr. Y paid the club for the total amount due. As long as Mr. Y pays the club directly, the club does not have to ask Mr. Y if his friends are reimbursing him because the host-guest relationship is assumed. However, if there's evidence to show that the friends paid the club directly, then the income would be considered non-member. Here's another example. The M Clubs holds a Memorial Day party for its members. Members are required to make advance reservations and are billed for the number of persons in the party. Some of the members bring a guest to the party. The club should maintain vouchers for the day. As an alternative, the club can maintain a reservation sheet. as long as 75% or more of the persons attending the party are members and payment was received directly from the members, a host-guest relationship will be assumed. And the club need not ask if the guests reimbursed the members. So part of this is the gross receipts test is the examiners to review records maintained by the organization for parties where the host-guest relationship is not assumed, and the following information should be maintained for each function involving non-members: the date, total number in the party, the total number of non-members in the party, total charges, the charges attributable to non-members, charges paid by non-members, member-signed statements regarding reimbursement, member-signed statements regarding employer reimbursements, and member-signed statements regarding gratuitous payments. So here's two examples to illustrate where a host-guest relationship cannot be assumed and where the club must retain adequate records to support the club's classification of non-members as a guest. The first example is a meeting that served a business, personal, or social purpose of the member. In this case, Mr. Z, Vice President of Marketing, here holds a business luncheon meeting at the X Club for the marketing department of his company. Mr. Z is a member of X Club, but none of the other 25 persons in the group are members. Here, the specialist, the examiner, will specifically verify that the meeting served a business, personal, or social purpose of the member, and in this case, that was a proper use of the club. Here's another example illustrating a gratuitous payment by a non-member. So in this example, Mr. A and Ms. B decided to get married at X Club. Mr. A is a member, but Ms. B is not. They invite 200 guests and plan to pay for the wedding themselves. After the wedding is over, Ms. B's parents present their wedding gift to the newlyweds, which is that they propose to pay for the wedding. Mr. A signs the voucher here, documenting what happened, and this is an example of a gratuitous payment made by a non-member. As long as the club maintains a properly completed form, this event will be considered member income. So, for the gross receipts test, the examiner is to apply the facts and circumstances test where in cases of where income exceeds the 15% limitations. Now those factors can include the actual percentage of non-member receipts and or investment income, the frequency of non-member use of club facilities, the percentage of years, the number of years the percentage has been exceeded. In a year where a high percentage of non-member income in 1 year should be viewed more favorably than a pattern of consistently exceeding the limits. For example, a high percentage of non-member receipts in 3 years is more likely to indicate the existence of non-member purpose than the receipt of a high percentage of non-member receipts in 1 year out of 3. So the Internal Revenue Code defines business taxable income for social clubs as all gross income that is not exempt function income. Exempt function income consists of gross receipts from dues, fees, or other charges paid by members for normal and usual social and recreation purposes and set aside income. Non-member use of facilities, including income from reciprocal use of the club, is generally taxable income. Investment income, it also includes royalty income, and non-traditional business activities, including those with members. It can also include sales of property and activities which are not in the furtherance of its exempt purposes, including those members. Now you might notice here that once again it does include reciprocal use by other clubs, and that would include payments from cruise-ins. So the examiners to examine cash receipt journals and receipts supporting documents to determine the size, extent, and nature of the club's income and whether it is related to the organization's exempt purposes. They're also to identify any income from non-members or the general public. Amounts paid by a member's spouse or by a member for his or her dependents is generally considered exempt functional income. Amounts paid for the benefit of a member by a member's employer or a gratuitous donor typically would also constitute exempt functional income. So in conclusion, many of the procedures that a yacht club must follow are really driven by the IRS rules concerning social clubs. While the odds of being audited in any particular year may be small, the IRS can look back over a number of years. Following the guidelines for social clubs is not that difficult so long as policies are clear and enforced. By understanding the rules, the leadership of the club can identify safe harbors and avoid hazards. Anyway, this is Steve Dale here signing off and wishing you fair winds and following seas to all. Thank you.